I made $740 today in 15 minutes with this opening range breakout, and in this video I want to talk about why you might be catching so many false breakouts and how you can find the higher probability setups like I took today in order to make profits like this yourself. So with any trading strategy, in my opinion, preparation is going to be key. You need to have a plan going into the trade, and you need to know which trades are going to be better setups in the first place, so that way you're able to cut out the setups that are going to be higher risk and trade only the ones that are going to be better probability. So today, for example, we have our morning newsletter posted every day in the Market Master group. This is going to contain a list of stocks gapping up in pre-market, and we can see that one of them is going to be HTZ. This is the stock that I ended up trading today for this opening range breakout, despite there being quite a few stocks above it for the gapper list that are making bigger moves in the pre-market session. So I want to talk about why that is here in this video. Now if we go over to the opening range breakout alerts channel, we can see the opening range breakout level for HTZ is $5.85, and about 4 minutes after that opening range breakout level actually formed, we get our opening range breakout alert posted by our bot here that the price is starting to move above that opening range breakout level. Now, right around that same time, we have OS888, one of our members here in the Market Master group, posted about HTZ, and I shared my thoughts on it, posting that it was a bullish setup for a run today. Earnings were the gap up catalyst, strong volume was coming in, and a large amount of the float is short at 18.35%, so we could see a nice squeeze higher today. So I want to just highlight here on the chart this opening range that we see form within that first 5 minutes, and that's simply going to be the high and the low of that first 5 minutes of price action, with the high being $5.85 and the low being $5.60. We can go ahead and highlight that entire section here to show us that opening range. So simply put, what we would be looking for would be a breakout trade as the price starts to move above that opening range high. So right into this move here, and we would be risking off of that opening range low. So we would place our stop loss or our risk level underneath that low. And with this trade, because of that being our risk level, we would be risking about 25 to 30 cents per share on this trade. Ultimately, it ended up going well over $1 per share higher, so a reward potential of over 3 times the amount that we're risking. However, that's not always going to be the case, and obviously not every single opening range breakout is going to work that way. So I want to talk about one of the examples today that actually failed and tell you why I avoided this stock and why you should be avoiding this type of setup as well. Now if we take a look here, this kind of looks very similar to HTZ. Stock is gapping up in pre-market, it's trading pretty strong volume. We have that opening range that forms. The high of that first 5-minute candle is going to be about 80 cents and the low is going to be about 71 cents. So if we just go ahead and fill in that opening range, we would be, of course, looking for a breakout trade, just like with any other opening range breakout. So we would be entering somewhere up here into this move, which ultimately ends up being the high before this pretty big sell-off. So ultimately, we would end up getting stopped out and taking a loss on this trade because of this false breakout. So how does this differ from HTZ, and what gave me the conviction to buy HTZ for the breakout rather than MSPR? So like I mentioned in the group chat, HTZ was gapping up in the morning because of the earnings report that was released by the company. An earnings report is a really great catalyst that can lead to some of the biggest moves in the market. And the reason for that is really because earnings reports a lot of times end up getting a lot of institutional activity. So institutions will see that a company is starting to turn profitable, or maybe they're starting to decrease their debt, they're increasing their revenue significantly, and so on and so forth, and they will start to buy up that stock. All of that demand coming in from these big institutional buyers is going to push the price higher. So that's why one of the best catalysts, in my opinion, for a gap and go or for a multi-day run is going to be an earnings report. And today we had HTZ report their earnings and then have a nice gap up. We can see that they were able to drive their EPS to profitability. They reported a bullish Q3 earnings report. The stock is jumping 19%. They surpassed their earnings and their revenue estimates, and so on and so forth, all of those being bullish things for the underlying company and for the stock. Now, if we compare that to MSPR, which was the opening range breakout that failed, we're going to see that MSPR was pretty much just a pump and dump. There was no news associated with that move, and there was really nothing to validate buying the stock at a 30% premium compared to its previous day's close. So number one thing that you want to see with a higher probability opening range breakout is going to be some kind of catalyst to actually back up the move in the first place. And if we go back to HTZ, one of the things that I mentioned as well is that this stock is very heavily short sold. There's about 18.38% of its float being held by short sellers, which simply means that if the stock does start to spike, as it began to do so today, those people that are holding those short positions are now going to be at a much higher risk for those short positions. And that's going to lead to a lot of them cutting out of the trade and buying back their shares to cover out of their positions, which is going to lead to an increased amount of demand coming into the stock as well. That paired with the institutional buying, that paired with day traders like you and I getting in and out of the trade with the intraday momentum, all of that is going to kind of push the stock price higher. And that's why a high percentage of the float being held by short sellers can actually be a very bullish thing when you have a strong catalyst. Now, one other thing that a lot of traders often overlook that is a very telling thing when it comes to trading breakouts is going to be to look at the longer term charts. Most day traders that are looking for these opening range breakouts, they just focus on the 1 minute chart or the 5 minute chart because that's the time frame that you're typically using for your entries and your exits with a shorter term day trade. However, if you look at the daily chart, it can really tell you what the stock historically has done in a very similar situation. So with MSPR, we can see, for example, first of all, it's in a very strong downtrend on this daily chart. Just a couple of months ago, this stock was trading over $20 per share. This may be adjusted to some reverse splits, but regardless, now it's down under $1 per share. So obviously, sellers are in control of this stock. And we also see that anytime there's been a gap up in the past year or so, all of those gap ups have not held on to their gains very well. They've pretty immediately come straight back down. And that is a very telltale sign that today's gap up is most likely not going to hold on to those gains as well. And if we compare this daily chart to the chart for HTZ, which was the successful opening range breakout today, we can see it's a very different daily chart. This is actually a stock that over the past couple of months has been forming a little bit of a flag or a little bit of a wedge here on the daily chart. There's also some support that seems to have been forming around the $5 level. It's much, much closer to that 52-week high, which was $9.39 when compared to MSPR. So all of those things are going to go into making a decision to buy an opening range breakout or to avoid it. And that's not to say that a stock like MSPR can't have a nice spike up, but that is to say that usually you should be a little bit more cautious with those type of setups, and you should be quicker to lock in your profits, expecting them to not become big, long intraday runners. So those are some of my thoughts when it comes to trading the opening range breakout strategy. If you're interested in trading these stocks with us in real time, getting access to our real-time opening range breakout alerts, as well as our detailed trade plans, our live scanner streams, and even our day trade bootcamp program. All of that can be found at Master the Market. There's going to be a link down below in the description for you to get signed up. But anyway, thank you for watching this video. I hope you found some value in it. And if you did, please make sure to give it a like and subscribe to the channel. Thanks again for watching. I hope you enjoyed, and good luck with your trading.